Thank you for coming to the website for James D. Miller CPA and Associates. This is our web series. The topic of this one is automobile deductions. Automobile deductions are, to be blunt, are the one deduction that everybody who owns a business usually tries to take, and in many cases, in an audit, those deductions can be taken from the taxpayer very easily. Why is that? Well, in order to deduct your automobile, one is supposed to maintain a mileage log. That means a mileage log that is maintained as the year goes, not done months later or years later. What is more typically the case is that somebody owns one or possibly two or even more cars that they use in their business. They pay for their gasoline, they pay for their maintenance, and they deduct it, and they pay for it with a company's checkbook. If and when the time comes that they get audited, they realize then that we have to do a mileage log in order to justify the deduction on our business. And then they go about trying to justify the mileage long after the fact. Now the problem with that is that the IRS rules on this are very clear. You can deduct the mileage, or you can deduct your automobile expenses, provided you've maintained a mileage log and that you've done it contemporaneously as the miles were occurring, weekly, daily. To create it after the fact, it's been tested in court, it's disallowed. So in a perfect world, what would happen is all of my clients would be maintaining a mileage log that would distinguish between business miles and personal miles. On the business miles, it would identify what the trip was for, what your beginning and ending odometers were, and who and what the purpose was. And then what gets reported to the IRS is all of your miles, and then how much of it is business miles, and then you do your calculation from there. So let's pretend that you had 10,000 miles on a car, and 7,000 miles of those were tied to business, and you had kept a mileage log. You could either deduct your mileage, or you could deduct 70% of your business expenses, including depreciation and interest on the car loan. Again, it all comes back to your mileage log. Well, in reality, I have had very few clients who actually keep a mileage log. So how do we solve this problem? The primary thing that I have told my clients is at least begin a mileage log and keep a very detailed calendar. That is the key, to have a detailed calendar. Why? While the IRS can dispute a mileage log that they can prove was not done contemporaneously, they have a very hard time proving it, especially when it's delivered to them in the form of an Excel file or software. I have many clients who uses a product called Mileage Whiz to produce mileage logs, both at the time that they incur the miles and after the fact. It remembers locations and it'll produce the mileage log for you. At the very least, when I prepare your tax return, what I need is for you to make representations in terms of your total miles and your business miles, so that I can present that to the IRS. And this is one of the, by some people's standards, this is one of the flaws in our system, in that I'm allowed to file your tax return based on what you tell me. If you tell me that you had 20,000 business miles and 30,000 miles of total miles, I'm allowed to take that information on your word and file your tax return and make a representation to the IRS that this is your deductions based on these representations. Here's where the problem comes in. When the IRS decides they want to look at the return, one of the very first things that they will do is they will come back and they will ask for your mileage log. That's where they start. If you can't produce that, or if they ask me, I ask you. You can't produce it, that places the entire deduction. Whether you took miles or whether you took actual expenses is irrelevant. Both of those are based on proving your business use. Without the mileage log, you don't get to take those deductions. So my emphasis to my clients is either maintain the mileage log in detail or maintain the capacity to create that mileage log. Another key element of this is outside corroborating documentation. So you have a car that you drove 30,000 miles, 20 of which was for business. What is really critical is that you be able to back up that claim with something other than your own words. What does that mean? That means you did oil changes, you had repairs. In different stages you might have had documents or receipts that documented the mileage from somebody other than yourself. If you have documentation that can justify the length of the amount of miles that approximates the year, and at the same time a mileage log in an Excel format or in a software format that corroborates that, and receipts from different places that would corroborate where you were, you can sustain your automobile deduction. But that is what is be required, and we encourage our clients. Now, if you need any help with this, for example, the software Mileage Whiz, it's a very good software. I have an Excel file that I use that does the same thing. It's less pretty, but it works. If you need any help with this, do not hesitate to call. And thank you again for visiting our video series. But we hope that you'll take this information, and at the very least, start to pull together documentation in the event that you're audited. Thank you very much.